And we're back with another market update looking at the spring-summer market here in North Texas. We're going to do a deep dive into interest rates. What do we expect is going to happen? I know some people are looking to maybe retire and move to Granbury, and maybe they're keeping an eye on what are interest rates doing, what are housing prices doing. So we wanted to kind of give you a snapshot of what we're looking at going into the spring this year. I know some folks are maybe thinking about relocating and moving outside of Texas. Maybe there's grandkids up north or wherever. We have all sorts of situations, and they're keeping an eye on the market, and they're kind of curious, what are the options as far as selling now versus selling later? What are the pros and cons of selling now versus selling later, or waiting until maybe later in the year to sell? So we wanted to kind of answer a lot of your questions by giving you an overview of where the market stands, what in the world's going on. It seems like stuff is changing by the week. So we have been keeping up with a few really important items like the war in Iran, some updates with AI. We've seen some interest rates fluctuating, hitting their lowest point in 3 years, and then bouncing back up soon after the bombs started going off in Iran. So where are we at, and what's the plan moving forward? We're going to jump into that today. If this is your first time to the channel, we really appreciate you tuning in to today's episode. As always, we have folks that reach out to us sometimes a year in advance. Maybe they're planning a relocation, maybe they're selling and moving out of state. We really appreciate folks that reach out to us. It's encouraging to us. So if you have anything we can help you with, any advice, we would love to connect with you and answer any questions that you may have. So I want to start today by sharing my screen, starting with a look at the 10-year Treasury. For those who've been watching the channel for, a couple of years, you know that the 10-year Treasury is what the mortgage rates are historically tethered to. So 4.15, you can see there's been a good bit of movement. This is where mortgage rates hit their lowest point in 3 years. And this was just right before the war in Iran broke out. So everyone was very optimistic about how things were looking going into the spring market. Interest rates were below 6%, and everything was pointing toward a warming real estate market that would be a really good indicator of a strong buyer and seller's market. And by that, I don't mean the typical term for buyer and seller's market. I mean that mortgage rates were going to be cheaper, they were going to be, mortgages were going to be lower, and prices were going to begin rising. You might wonder how both of those things can be true. Well, if prices are going up and rates are coming down, the cumulative effect is a lower mortgage payment with slightly higher prices. And in that market, the sellers and buyers are both, I would say, winning. Now, over time, what happens is that as the rates keep getting lower, the prices go up. It begins to turn where the low interest rates are being nullified by the rising prices. But right at the outset, I believe that there was an opportunity coming this spring where mortgage prices, average mortgage costs were going to be going down while costs were going to slowly be rising. And that would create a really good scenario for the real estate market. However, the war in Iran has caused a few issues. So I wanted to show essentially, here is another article that came out. Housing demand is up, inventory is down, even with the Iran conflict. The situation was demand was picking up with the lower interest rates. Inventory was remaining slightly lower, so pricing was remaining relatively stable moving into this conflict with Iran. How is it going to play out? The situation right now is the war in Iran is causing surges in oil prices. The surges in oil prices are causing some concern about inflationary impacts. So inflation has been relatively tame for the last couple of months. Mortgage rates have been coming down. There have been some cracks continuing to widen in the job market, and that was the key indicator that we've been following. If job market begins to crumble, interest rates are going to begin to fall, period. So what's been happening is that the job market shows a little bit of weakness, and the inflation has been slowly coming down. If job market has a significant issues that begins to show up, you're going to see mortgage rates drop relatively quickly. If we see inflation begin to rear its ugly head again and cause some issues, then it's going to take a significant dip in the job market to bring about those mortgage drops, those mortgage rate drops. So where we're at right now is the oil prices, surging the way they did has concerns that maybe that's going to be reflected in the cost of energy and the cost of transportation and therefore in the cost of goods. And if that happens, then the Fed's going to be really hesitant to do any moves with the interest rates unless there's like some sort of major unemployment crisis. So there have been a few developments, even in the last 24 hours, where they are trying to bring down the oil prices temporarily while something is negotiated. So we're already seeing some relief on the average price of oil per barrel. We've seen that dropping some. So the situation is evolving daily. If oil prices remain elevated for several months, that could be a cause for some concerns. If we see, on the other hand, oil prices begin to come down and get back to where they were, then I think we will also see mortgage rates begin to dip back under 6% again, which would be great for the real estate market. So it all comes down to how things develop in Iran over the next few months. If interest rates go back over 6 and remain over 6 through the spring and summer market, I think that we will still have an okay market because that is still 1% lower than we were last year. But I don't believe it will cause it to be as warm as I had originally anticipated, 2 months ago. So with that, we're keeping an eye on things. Let me give you a couple of key pieces of information as far as data goes, where the real estate market is right now. All right, so if you're looking at Hood County, we're looking at a price drop of around 7% on median price over the last 12 months in Hood County. We see that there has been an uptick of 10% in listings and a downtick of 16% closed sales. More homes for sale, less sales. That means lower price, okay? So inventory actually has balanced out. We're sitting at around 5.6 months of inventory, about 6 months basically. That is not terrible. Looking at the days on market, we're up to a total of 130. So there is not a lot of homes that are just selling, the first weekend on the market. That's not necessarily the case. The days on market are accumulating, and it is having an impact. So when people are selling, it is something that's taking some time. Now, bear in mind that this is a cyclical reality or a cyclical market, and days on market are going to start to probably become less as we move into the spring. And then when you get to September, you're going to see days on market start to extend again. So right now we're coming off of this winter market where days on market does tend to accumulate. And so bear that in mind as we move into the year. 130 will probably come down some as we move into the summer. Okay, so let's look at a couple of counties real quick. Median price in Somerville County, down 10%. Active listings are up 22%. Closed sales are up 175%. So also bear in mind this is monthly snapshots. So there were 11 sales in Somerville County. So it's not a tremendous amount. So the active listing inventory has gone up. You can see here 5.8 months of inventory, days on market, very similar to Hood County. And then Parker County. Parker County has a slightly different story to tell. Prices are up 4.8% on median. So we've seen some average price points dropping in certain ranges, but as a whole, they're up 4.8%. Active listings are up 1.8%, and closed sales are up 4.4%. So with that, you can expect there to be a little bit lower days on market in Parker County than in Hood County, and that's what you find. So those are some specific things looking at kind of the shape of the market and how things are looking currently. One more, NAR existing home sales. So this is going to be nationwide. This is not going to be specific to North Texas or Granbury or Parker County or Weatherford or Brock or wherever. This is going to be, nationwide. So 1.7 increase in existing home sales. So looking at the numbers here, we've seen a slight uptick in number of sales. 2.4% increase in unsold inventory. So these numbers here show that sales are beginning to pick up slowly. What happens as sales pick up is inventory usually begins to shrink. Right now you have inventory surging as sales are slowly kind of catching up to it. And as we move into the spring, you're going to have a good surge of inventory. Hopefully, we also have a good surge of demand where people are coming in and buying homes. And if the demand outpaces the inventory, you're going to see the market begin to recover a little bit, and it will be a good sign. So, good article here. If you want to go and check it out, there's a lot to it. This was quite a long article, lots of information. This one, it came out today, actually. So it's something nice to check on. As far as real estate related news, like I said, the 30-year interest rates hit under 6% for the first time in 3 years a couple of weeks ago. And right after that, the conflict with Iran began, and rates jumped back up. 10-year Treasury jumped up, and it hasn't been tremendous. It's not like we're up at 7% again. We're sitting around 6.1 on the mortgage rates for the 30-year. We have seen prices in homes really cool over the last 12 months, and we are seeing homes take longer to sell. So if the rates do get a little lower, that'll help clear some of this inventory out, and we think that prices will likely stabilize. But if this conflict with Iran continues for 2, 3, 4 more weeks, and it causes some long-term challenges, then we're not really sure how that's going to shape in the spring market. It might end up pushing the market back into the summer, whereas usually the spring is when it really kicks off. It might push it back a little bit, what's going on. It's anecdotal. What we have right now we have a few listings, and typically this time of year, we're getting a lot more activity. Right now, we're not getting as much. One house, we had 3 showings over the course of 10 days. We did get a full price offer on it, but it just wasn't a lot of showings. It's just not a lot of activity. So the question is it going to come maybe mid-April this year rather than mid-March, as it has been in the last couple of years? So with all that, that's a nice snapshot of where we're at in the market. If you have any questions, any comments, we would love the chance to connect with you and answer any questions that you may have. Give us a call, shoot us a text, send us an email. We also have a newsletter that we put out for Granbury. It will be linked on our YouTube. If you would like access to that, if maybe you're seeing this on a Facebook reel or somewhere else and you don't have the link, just text me and we can shoot it over to you. It's based off of Beehive. My wife puts it together, and we just go over events. Maybe you're planning a trip here and you want to know what are some fun things you can do while you're here. We're happy to shoot that link over where you can do it. It's free, so I'm happy to have that. Yeah, so if you have any questions, we'd love to hear from you. If we don't hear from you, hopefully we'll see you around Granbury sometime.